Hello, my name's Ethan, guys. Make sure to check my website, ethanwrenn.com, for there you can find links to all my various socials. We're currently live on Twitch, YouTube, and the front page of my website. So wherever you may be seeing this, make sure to follow and subscribe. And let me know how I can improve. And you'll be notified when I go live next. On my website, I actually have a blog, as you can see here. If you just go to my website, ethanwrenn.com, top right-hand corner, click blog, you'll be presented with this page that has a bunch of different articles pertaining to finance, ETFs, the history of some of the companies we cover here on this channel, gaming content, emulation content, technology. I'm sure you'll find something that you find interest in. Every page, you're able to leave a comment. Let me know what you like. Let me know what you didn't like. I'd really appreciate the feedback. Also, on my YouTube channel, guys, make sure to go check it out. Make sure to subscribe. We're constantly updating it with new content. There's over 821 videos. And it's very fitting for this next piece of content we're going to be jumping into. And again, if you are on my profile, you can click this playlist button and you'll see a bunch of different playlists I have available on my channel that helps organize the content on my channel. Because again, there's 800 videos. It'd be really hard to sift through it without it being neatly organized, right? So again, if you're looking for crypto videos, commodity videos, that time we shorted videos, unboxings, it's all available here. So make sure to go check that out. The next bit of content we're going to be jumping into is VOX. This is the Vanguard Communication Services ETF. We filmed this video March 27th, 2023. Again, roughly 9 months ago. Let's see what I had to say about symbol VOX. The Communication Services ETF. So what is it that we like about symbol VOX? Well, before we even get started, right up here next to the symbol, you will see an M. This means every candle represented by this chart in front of us represents 1 month of time. It's important to keep in mind your time frames because it'll give you an idea of how long it might take for this expected return or respected pattern to play out that we are currently projecting. About the first half of the stream consisted of weekly charts. These are now monthly charts, so keep that in mind. If you come down here and look off to the right, you'll see the dividend yield for symbol VOX is 0.92%. Pretty good about what you might expect from like the DIA. So right in range with like those. Just want to take a moment to note, look at the price of the SPY when I made this video. The SPY was $396.49 when we made this video. What is it today? It's seen significant gains since then. The major market indexes, not necessarily as high as you might get from a single company like Home Depot that has a 3% dividend. But what's nice about ETFs is by putting a wide variety of symbols into what is essentially maybe like a basket, right? It kind of distributes your liability across them. So you're not your portfolio isn't subject to the movements of a singular company all too much, right? So what else do we like about symbol VOX other than its dividend? Well, every symbol we cover on this channel, one thing we like to look at is the RSI. As you can see down here, the RSI is oversold, touching that 30. This is typically a sign that the symbol is oversold or potentially a good value, potentially a good time to invest. Meanwhile, on the contrary, when the RSI is high in the sky, as you can see right here, as it was August 2021, right here, straight line, this is typically a sign that it is overvalued or overbought, or potentially it's not a good time to be putting your money. I also want you guys to note the price point represented by the top Bollinger Band here in red. It is this squiggly red line. This is the top band of your Bollinger Bands indicator. The Bollinger Bands indicator is representing the standard deviation of the price history for 20 candle periods. So for 20 candle periods, the standard deviation on the top end of VOX would have been roughly this $152 price point. Since then, it has changed in a large way, and you're going to see that real soon. Money into that said investment. I'm going to quickly go through and mark every time where the RSI was as low as it is currently. Boom. All right. So the prior time when the RSI was as low as it is currently would be December 2018. What happened here? Well, you can see the symbol VOX proceeded to run as much as 118%. Prior to that, in March 2009, we saw the RSI come down and touch the 30 area, and then symbol VOX proceeded to run as much as 161%. Very solid. Also, again, keep in mind this is the monthly time frame. If I zoom in here, you might see a blue line. This blue line here represents the monthly 180 moving average, and uncoincidentally, every time that symbol VOX comes down to touch its monthly RSI support, the 30, right? There's an interaction with the blue monthly 180 moving average. The blue monthly 180 moving average, as seen here, tends to act as a support. So every time it touches it, it will bounce and proceed to run. That is the behavior we see in symbol VOX. As you can see, this pattern's confirming currently as of October 2022. It happened in 2020. It happened in 2018. And I foresee it happening again. Now, where do we expect do we expect the VOX to go moving forward? Well, from its current bounce to its previous all-time high, that is a potential gain of as much as 82.47%, which is very good when you keep in mind, again, this is an ETF. It represents a wide variety of companies regarding communication services in the United States. So that is very good. I do foresee it even going higher one day, but I just want to emphasize that even just going to its previous all-time high would be as much as 82.47%. Now let's quickly cover some of the underlyings that this symbol represents. As you can see, I brought up VOX on Yahoo Finance, and these are some of their top 10 holdings. Yahoo Finance has been quite weird lately with these not being in order and it not showing the names of the companies. But as you can see, we have Activision, Google. So I want to comment on current events throughout this time period. Back when we originally filmed this video, symbol ATVI was actually still a publicly traded company. At this point, now that I'm filming this video, symbol ATVI, which is Activision Blizzard, has been acquired by Microsoft. Just to comment on some current events and some of the things that have elapsed over this time period. And again, this potential electronically traded product could have made you gain exposure to this merger and acquisition trade to the tune of 2.3%. Not huge, but it is there. But as you can see, we have Activision, Google again, AT&T, yes, Comcast, Meta, Facebook, Netflix, T-Mus, Disney, and Verizon. These are all extremely good names. Like, this is a very solid portfolio. I'm sure every single one of you watching this has heard of every single one of these companies, and if not, uses these services provided by basically every single one of these companies. They're all blue chip names. You could honestly just have VOX in your brokerage account and have a very diverse US-based portfolio. I wouldn't recommend it, but you could. Again, this is a very diverse. I would not recommend just holding VOX. 2024, Ethan says don't hold just VOX, but it is a good product, and a lot of the underlyings in VOX are very solid companies. Again, very solid companies. You have things like Meta, Netflix, T-Mus, and the reason you would not just hold VOX is because it's so skewed. It's a sectoral product, right? It's not evenly distributed across all these sectors, but it is a great product. Assets that a lot of you are very familiar with, and on their own, I could also recommend most of them, whether it be Activision, which is really what I was saying. Again, I like it because basically all of the underlyings at the time when we filmed this video were things that you could legitimately recommend, and basically are all things that have seen significant gains. Activision has obviously seen some gains. It had a capped amount that it could have gained. Google's definitely gained, T-Mobile's gained, Meta's gained astronomically, like hundreds of percent. And as you can see, 10% weighting to Meta. Meta's gained like over 200% since we filmed this video. Netflix also gained over 150+%. So a lot of great components to this ETF. Google, Disney, Netflix, these are all very solid companies that are also simultaneously at the support of in their respective stocks, which only adds further evidence to think that an ETF representing all these symbols that are also equally poised for bright futures would also run. So I am quite interested in the symbol VOX moving forward. And again, if it even just going to its previous all-time high, that would make the price per share for symbol VOX $150.57. How perfectly round. What a coincidence that it went to exactly $150. Not 151, not 153, just 150. Crazy coincidence. Yes, the way that VOX peaked out at exactly $150. So let's see where symbol VOX is today. Again, when we filmed this video, it's at a price point of $93.92. We also recognize that it was at a low of 82.57% as we were commenting in the Discord. Let's see where it's at today. Currently, symbol VOX is at a share price of $120.66. These are absolutely massive gains. And again, just looking at the chart, everything that we had on our chart when we originally made the video seems to be holding true quite well. Bounce off that monthly 180 moving average, came up through that 20 monthly moving average, and then bounced off that monthly 20 moving average, continuing to push higher into its 52-week high. And it's actually sitting on that 52-week high right now as I'm filming this video. Now, remember when we were watching this video together, I said, look at the top Bollinger Band when I originally made this video and how it was at a price point of 151. Since then, the standard deviation of the previous 20 candles, something we look at quite frequently here, has come all the way down from that 151 price point, and it is now sitting at basically the current price of this product. So it is actively at the top end of its standard deviation, something to keep in mind. And I just wanted to show how that indicator has actually changed and evolved over time. But other than the indicators that are, self-updating, right? If you look at the charts, this chart has not changed since we made this video. All the way back in March 27th, 2023, when this chart was put together, in fact, this chart was probably much older than that, but when we made this video showcasing this chart, we have not updated this chart in any way. The green thumbs are in the same spot. Green thumbs, same spot. Upward trending price channel, every line's the exact same. No additional lines were added. We got one red line, yellow, yellow. We got one red line, yellow, yellow. It is the exact same chart, guys. So, to go further in the detail, let's see the rate of return. From a price point of 93.92, which is when we filmed this video, and it was right in this candle here. That is a gain of 29.56%. That is really good. Even if you had bought it when we made the video at this price point, you would have still probably outpaced the S&P 500. Let's take a closer look at that. Give or take right here. Okay, so we're going to overlay the S&P 500. And as you can see, for this time period, the time period represented by this video with an entry price of $93, you would have achieved a return of 28.62%, while the S&P 500 would have only netted you 21.9%. That's roughly a 35% performance increase by opting for the VOX over the S&P 500. Again, when you're constructing portfolios, we are long-term investors. We're not traders. We're not waking up at 9 a.m. every morning staring at like these super high-risk positions or all these various different things that others may utilize. No, we're trying to construct these long-term portfolios that can seek to grow for months, if not years into the future with minimal maintenance. Every time a user has to add an additional order or sell an additional product, this is like an inefficiency, really, when you think about it. You want the end investor to make as little engagements with it as possible. You want passive income. You want your money working for you. You don't want to be working for your money, guys, right? So that's what we try to provide when we are looking at these symbols. More often than not, when people are comparing the performance of a particular equity or a particular fund, they are going to be comparing it to a benchmark, and that benchmark is oftentimes the S&P 500, because that's what most people's 401ks are going to be looking like. Why would I go out of my way, put all this work in to try and manage investing in all these various positions when I could just buy the S&P 500? And again, if you have put a lot of work in, if you're putting 10, 20 hours a week into managing a stock portfolio personally, and you're not beating the S&P 500 year to date, again, for your entire portfolio is not up more than the S&P 500, you would have been better off just buying the S&P 500. So that's kind of why they would look at the S&P 500 as a benchmark. Another problem with like day traders, for example, when they're doing these day trades, they'll be like, oh, guys, I made 40% on this penny stock in like a week. It's crazy. But they don't tell you that, and it should almost be obvious, right? But they don't put their entire net worth into this extremely high risk penny stock that they're trying to gain 50% out of in a week, because it could just as easily go the other way in a week. More often than not, they're using a tiny fraction of their portfolio, like 1%, 5%, 10% maybe, in these types of positions. And okay, you made 50%, but that's still very, 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 very small in terms of your total portfolio gain for that time period. So again, this is another reason just why I lean towards, long-term investing. Now, again, this is the returns for had you entered at the exact time this video was made. Pretty solid. Now, if you just go back a little bit and actually look at when the equity bottomed out, is right where this chart becomes gray, right? Because we had our projection in place from the video, talking about it in the Discord, etc. We were using that monthly 180 moving average, the indicators you see me use in every video and every product we cover here on this channel. Very, scientific approach. And as you can see from that very bottom, from that weekly 180 moving average, could even go here, we saw the S&P 500 gain as much as 25.06%, while the VOX, on the other hand, gained as much as 48.58%. This is almost double the performance. And again, these are both ETFs. It's not like I'm comparing one stock to the S&P 500. These are both ETFs. Now, the VOX, again, is a little bit more of a growth product. It has things like Google, Meta. These are very tech skewed, but again, it outperformed by as much as 50%. Let's even put some other products in here. Just to name one, we could put like did underperform the XLK, but again, extremely well. Tech has done extremely well over the past year. This is a communications product. I think that's everything we need to say about symbol VOX. Did extremely well.